Hello and welcome back to my YouTube channel. My name is Raitis Alferovs and I'm part-time investor and trader, and you're here at Farewell Total Return Investing. In this video, we will take a close look at the Coca Cola stock, and I will explain to you why I have allocated my money into the Coca Cola stock based on my technical analysis. Before we take a deep dive into the Coca-Cola stock, we have to look at the global indices to determine if it's an overall good time to buy stocks at this time of the year. For this, we will take a look at the Dow Jones futures contract compared to the S&P 500 and the Nasdaq's future. You can see we have the Dow Jones futures at the top, S&P in the middle, and Nasdaq at the bottom. And as you can see, we are currently witnessing a divergence inside the market. The Dow Jones is outperforming the two largest indices in the world, and because you can see the S&P 500 has made a lower low and the Nasdaq has made also a lower low, while at the same time the Dow Jones made a higher low and never made the run below the sell side liquidity pool, resting below the swing low right here. The S&P 500 and the Nasdaq had made both made this run below the low to pick up the sell side liquidity. They had to first accumulate new long orders below this low where sell side liquidity resides to then trade higher, and we're anticipating a further continuation of the current bull run inside the stock market. And that's why we consider this a good time to buy stocks. And because the Dow Jones is outperforming, we have picked us a stock from the Dow Jones. And as you can see right here, the Coca-Cola stock also made a higher low at the same time, while the Nasdaq made a lower low, and the S&P too. So let's start off with the higher time frames, and we're gonna get back to the daily time frame a little bit later. So what can we see here in the monthly chart? We have a run on sell side below this low. We took out sell side below this low, and also this major sell side liquidity pool resting below these relative equal lows right here, which were made at the end of the year 2021. With the sell side rate, the market traded into a monthly fair value gap, which is a busy buy side imbalance, sell side inefficiency. We perfectly traded into it during October 2023, and then you can see you perfectly filled it in and traded higher from there. After that, we saw another 3 continuous up close candles after the run into the monthly fair value gap, and now we are aiming for the buy side liquidity, which rests around $65. Now let's take a look at the whole scenario from the weekly chart. You can see we have our targets projected right here. Again, you see the buy side liquidity pool right here, and you can see the run on the sell side liquidity. You can see how clean these equal lows right here in the bottom left corner are, and how we rated them perfectly with a sharp move lower, and then we recovered from October going into today's trading day. And what we're anticipating is a run higher. Here are our targets. The first target is above the swing high. We're gonna take first partials right there, and then our main target is at $65, which rests above this buy side liquidity pool. We can make it even right here, so $65 is our target, and we can leave a runner for target number 3, which is the all-time high of the stock. You can leave about 10% on until we reach the all-time high, and then you can also close the whole position, which brings us to a total of 1 to 2 risk to reward ratio, which is pretty good. This is the minimum standard. We take nothing less below than 1 to 2 risk to reward ratios, so fits in the criteria. Now let's look at the entry criteria, which we used for the long right here. You can see we have a weekly order block right here. I'm going to zoom in a little bit so you can see it better. We have the previous week we traded above the order block's high and closed above it, which validates it. And then this week, as you can see, we opened and traded right into the high of the bullish weekly order block. On the daily, we had another confluence right here. I removed the entry tool right here. You can see we had another sell stop right here, rallied higher again, and then we saw a run into the daily fair value gap, and now we're trading perfectly away from it. So we had this bullish weekly order block coupled with a daily fair value gap, the busy, perfect textbook example. That's what we want to see. Of course, you have also here the breaker right here. After we had this run on sell stops, we traded higher, which makes this a breaker. I mean, you could add this into your analysis, but you only need one or two good entry confirmations, and that's all. You don't need 10 of them, 10 PD arrays to line up. So you can use whatever you like. We used the daily fair value gap coupled with the weekly order block. That's where we took the trade, took our long position at. So this pretty much wraps up the whole video. As you can see, here are our targets. We're currently inside a long position in Coca Cola, and these are our targets. And I hope you enjoyed the video. I hope you could find some valuable information. We are going to release a global overview over the Forex market and the indices with our view on the market based on our technical analysis this weekend. So stay tuned for it. Hit the like button and turn on the notifications if you haven't, so you don't miss out on this video. And I would say you will see us in the next one. Stay safe, trade safe. Bye.